Greetings to you, my trading friends. It is Thursday, February 25th, 2021, and we have a trade in the VIX today. We haven't traded the VIX in a while. VIX, surprisingly, you would think would have higher liquidity, but it has a liquidity rank that you can see right there of 3 out of 4 drops, and an IV rank right now of 8. So we're positioning ourselves to benefit should there be a pop in volatility, and Lord knows what would cause that these days. Weather events, political events, I don't know, but maybe this is new to you, trading volatility. So we're going to take a look at that today in today's cherry bomb trade. So we're going to look at a long call vertical. We're going to be modifying the trade that was sent to us in our inbox this morning slightly. We'll take a look at the original, and we'll also take a look at the modified version. And you can, of course, decide whether or not you like either of them at all. So let's hop on in to Thinkorswim, shall we? Hi, everybody. My name is Neil. I'm down here in the corner, and I'd love to invite you to join me if you have not already. Stay tuned in the end. We'll talk about how you can join us and practice your trading skills as well. So right now on screen, you can see I have the trade pulled up, but I wanted to just point out we do have quite a few of defined risk trades that are going to be in the 21 days to expiration sort of management point. So keep that in mind. If you've been following along and building this portfolio as well, it may be opportunity to do some rolling. And I wonder if I'll be rolling this call that I have in my target position right now. Gold, I don't think is something I'm going to try to roll on that one. I'm not a big fan rolling iron condors. I think we might be testing the put side. Let's just do a double check on that one, huh? I know this is a little off task. Let's go back over here. Gold, where are you? Nope, that was Home Depot. I missed, bad aim. Yeah, it's testing the put side a little bit. So we could potentially bring down our call side to maybe the expected move. Let's see, what would that do for us? Yeah, I wonder. I don't know. I mean, having this position is kind of nice because it is a bearish negative delta trade, right? So when you're bullish on gold, you're bearish on the market, and have plenty of positive deltas. So I might actually leave that. I don't know. What do you think about that one? All right. So let's go on back to the Analyze tab. Let's go to the recent. Let's find the VIX. All right. So let's take a quick look at the chart. You know that the VIX has these rapid spikes up and then usually rapid drops down. And, hey, they seem to happen with relative frequency. We maybe are in our lull period between that. And we'd be buying 51 days of time for this to potentially have a spike in there. And should it have that spike, that would be great for us. We're not going to be risking too much money on this trade as well. So maybe if you're the kind of person that's going to be doing this with real dollars, no, we're going to be putting $100 of risk on the table, which might be worth it to you. All right, back to the Analyze tab over here in VIX. Type this into your ticker box here, and then we're going to be in the April monthly expiration with 54 days to expiration as of today, the 25th. And you're going to scroll on down to the at the money section here. I believe the original trade that was sent to us in our inbox was buying the 26 call and selling the 28. Let me just verify on my second monitor over here. Yeah, that was correct. So let's change the strikes that I have down here. Long the 26 and short the 28 call would be, in this case, a 60-cent debit. Meaning if you know that the width is $2 and you're paying less than $1, right? Your probabilities are going to be not so great. So let's take a look at those probabilities, right? So we drag this over here. Yes, you're only risking $60, but you only have a 32% probability on this one. Not a big fan of that. And I think the thinking at the time was the VIX futures, that was going to be in the money. Well, the VIX future right now, it looks like, is at a 24. However, if we also look at the VIX now, the VIX itself is at 22. So that's why I had us buying in the money, selling out of the money, $2 wide. Now we're looking at paying $1. That's that risk one to make one. I mean, literally. right? You could lose the whole dollar. If VIX goes down below 23, because remember, if we're buying the 22 strike and we're paying $1 for it, our break even is going to be at 23 at expiration. That $1 that we paid for it, right, is how much it has to go up above our long strike to break even. Yes, we're presently above that. However, that number is going to drop down to 22 at the open, probably. Who knows? We'll see. So, yeah, I mean, this might not even fill. But let's get our probabilities for this trade here, shall we? This trade here is looking like a 45.9, which is better than the 30-something% that we just had. I would prefer to put this trade on rather than the 26 and 28 strikes. What do you think? Which one would be the one that you would pick if you're going to do this trade at all? So, yeah, let's go ahead and right-click this trade, choose confirm and send. We'll see that we have the same thing we already said, risking $1 to make $1. But probably going to have a good P50 on this one. I think we're going to be in the 60s, according to Tastyworks, which the numbers are a little off here, right? So let's see, 60% probability of collecting, what was that? $50, right? $50, 60% probability of that happening in the next 54 days. I'm going to go for it. We don't have VIX in there. Today's the day we're getting rid of TLT out of the portfolio. Thank you, and good riddance to TLT. That did not work out for me. It's in my working orders right over here. We'll see what happens if we get filled on this VIX trade as well. All right. If you've made it this far into my video, I give you a thumbs up. And if you're subscribed, all right, you're probably leaving at this point because you already subscribed. But if you haven't already subscribed and you're new to this channel, let me tell you a little bit what we do here. When I mentioned that we get emails with trade ideas, you can get those same emails too. They don't come from me. They come from Tasty Trade. You probably heard of them. They're a really great financial media company, right? So head down to the description. You will find a link to go sign up for their email lists. They have several. You can check off all the ones you want, right? I recommend all of them, but the one that we use is the Cherry Bomb trades. Get that in your inbox 5 days a week, really early in the morning. And they come, well, depending on where you live, right? So they come in, and what we do is we use Thinkorswim to train ourselves, to practice our mechanics, to take the fear out of trading. So if you want to take the fear out of trading for you and give yourself a proof of concept, go through all because then, like, if you learn it in Thinkorswim, it doesn't matter what platform you're using, you'll get the same concepts will apply. So I invite you to join us, sign up for that email, click that subscribe button, and ring the bell because, of course, options involve time value, right? So it's important that you get these trades on in the right time. So, all right, everybody, until I see you in tomorrow's final Cherry Bomb of the week, happy trading.